So it's the middle of 2022 and man, has it been a ride in interest rates. So we realize you may be feeling a little bit nervous about what's going on in the marketplace, but it's really key that we talk about what it looks like in today's environment and what are the tools that we can actually help you with to see if we can actually navigate this and get you the best house. Starting out earlier this year, rates were down in the threes, about the mid threes. They rose up into the fours, then into the fives, and then in June, they popped up into the sixes. And so let's say you were a household with about $150,000 a year, which means $12,500 a month is what is normally coming in. Now that's, pre-tax, but still that's how they qualify you at the bank. So if you're trying to keep your house payment within about 30% of that, you're going to be looking for a payment somewhere in the $3,750 range. What we were looking at is we had a little matrix made up with one of the lenders that we work with, and we wanted to show you what that means for your money. So if you are trying to stay in like a $3,800 to $4,000 payment range, at 4.5% to 5%, that would be a $750,000 house, which in many markets around King County, Snohomish, and Pierce is still a very nice house. Now, with interest rates having hit upwards of 6%, that's where affordability gets hit. That higher interest rate means for that payment level, now the house you can afford is $584,000 to $668,000. That's a $82,000 to $166,000 price point difference. So that's a pretty big deal in terms of what you can buy, because in that price range difference, we're talking it's a difference of a garage or two-car garage, upgraded kitchen, newer home, different neighborhood, upgraded baths. There's a lot of different things that can be impacted by those price points, right? So here's the thing. We want to talk about points. You may or may not have talked to your lender about this yet, but points are basically prepaid interest. Prepaid interest that you give to the bank as part of your closing costs. And what you're trying to do is, let's say the interest rates are at 6%, maybe you pay 1 point to come down a certain amount of interest rate so that it becomes more affordable. I'm going to give you an example, a real example of one of our clients. They're buying a $750,000 house. They're paying $7,500 to bring their interest rate from 5.5% to 4.75% to get it in the payment range that they would have had prior to the rates having gone up. It's a conversation you have to have with your lender. Points will range all over the place. They vary from day to day how much they charge for them. So again, prepaid interest to the bank because they're accepting a lower long-term payment from you. So it's just a trade-off. And when you know a little bit about time value of money, it makes a lot more sense. So it's a good question to bring forward to your lender, no matter who it is, and just say, hey, we're trying to get as much house as we can. Is it possible for us to buy points to bring down our interest rate and therefore our monthly household payment? Even better if you can negotiate it so that the seller is crediting you that amount as part of the transaction. And what we are definitely seeing right now is sellers are much more willing to have that conversation. So let's make sure and ask. It's one of the reasons why you're working with Team Reba, because of our knowledge and experience and the fact that we know to ask these questions and work on problem solving for you so you get the right home. Thanks for working with us.